Welcome to Vector Arbitrage. The world just changed. The images are now official. Yesterday at 4:30 a.m. ET, the White House confirmed that Operation Absolute Resolve, a massive strike involving over 150 aircraft, successfully captured Nicolás Maduro and his wife, Celia Flores, in Caracas. Maduro has already landed at Stewart Air National Guard Base in New York and is being transferred to federal custody in Brooklyn. While the news cycle debates the legality of the strike, the markets are already pricing in the death of a 25-year energy paradigm. This is what I call a structural vector break, when decade-long asset relationships suddenly decouple. The last time we saw this? 2003, Iraq. If you can read the cross-asset signals now, you are looking at generational wealth. Here is the smart money playbook for Monday's open. Venezuela sits on 303 billion barrels of oil, the world's largest reserves. But here is the paradox: short-term volatility, long-term supply glut. With the naval blockade tightening and Maduro out, watch the Brent WTI spread. U.S. Gulf Coast refineries are literally engineered for Venezuelan heavy crude. They are scrambling for supply right now. Expect a massive risk premium on Monday morning, but don't get married to the long side. If the U.S. runs Venezuela as Trump suggests, we could see 2 million barrels per day re-entering a market that is already oversupplied by 3.8 million barrels. This is a volatility trade, not a directional bet. The real alpha isn't in oil, it's in the tech that made this operation possible. This wasn't just a raid, it was a cyberkinetic integration. Companies like Palantir, Anduril, and the ITA ETF are decoupling from the S&P 500. Why? Because this operation is the global sales pitch for the next decade of AI-coordinated warfare. Beyond tech, look at the China leverage. Beijing has controlled Venezuela's coltan and gold for a decade. That supply chain just broke. Watch Western mining companies with South American exposure. They are the derivative play as the U.S. reasserts the Monroe Doctrine. Now, the highest conviction play, Venezuelan sovereign bonds. These have been dead money since the 2017 default, but institutional desks at Barclays and JP Morgan are already modeling recovery values. The 30-cent floor, this is the conservative base case. The 45-cent ceiling, this is the best-case scenario, requiring a clean transition and rapid oil ramp. The capture doesn't change the debt math, but it drastically increases the probability of an orderly restructuring. If you're trading the 2027 PDVSA bonds, you aren't buying a country. You're buying a seat at the world's most complex restructuring table. Monday will be chaos. To win, you must. 1. Watch the decoupling. Don't trade the index. Trade the gaps between oil and oil equities. 2. Trade the time frames. Long volatility for 48 hours. Position for the supply wave by Q3. 3. Manage the tail risk. Venezuela's Supreme Court has already named Delcy Rodriguez as interim president. This transition is not settled. Subscribe, hit the bell, and let's navigate the vector break together. Markets reward preparation, not panic. Thank you for watching.